I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
Hi there, I'm JB. In this video, I'll take a look at AMD and run them through my valuation sheet and determine is AMD a buy in 2023. I use the valuation sheet to determine if a company meets my requirements for investing, and the sheet is the first gate in becoming a part of my portfolio. If a company gets through my valuation sheet with about an 80% or a higher score, then I'll look deeper into the financials and do a bit more research. And maybe, just maybe, it'll get on my list of companies to buy, and now I just have to wait until it reaches my target price. So, let's look at AMD and start with the basic financials. As I mentioned in the last video, where I go through the metrics, and the best process is going through the financials yourself, using the investor relations site, or at least use something like Macro Trends or sites like it, where all the financial data is available in raw form. If you're just using a site like Guru Focus or something where you just get presented the results, well, then you don't know the backstory. You can also read all the information available in the 10Q and the 10K and all the other earnings releases. The more information you go through, the better. Often the real important information is hidden in plain sight. Usually you'll find great information in both the 10Q and the 10K filings. By the way, 10Q is the quarterly filing required by the SEC, and the 10K is the annual filing. In the 10Q and 10K, you'll also find an overview of the current financial statement and a list of risk factors that could impact the company. These are really great because they show you what you have to be aware of. You'll want to understand how the company makes its profit, how cash flows through the business, and how the business is financed. Well, when I look at AMD, I see somewhat the same trends as I see in Intel. Although one could say AMD is still in the growth phase and Intel is not a fast grower anymore. So let's look at the financials and see what we find out. Revenue. When looking at the last 5 years' revenue, you'll notice a trend starting in Q2 2020. Yes, the time where everyone suddenly had the need for personal computers and devices. Sales spiked for everyone and you could sell any chip no matter what price. Notice how Intel is almost the opposite curve. AMD rose, Intel fell. That was kind of funny. Revenue from 2021 to 2022 is up 44%. It's quite good. And over the last 5 years, it's almost 37% average growth. But here we kind of see the issue with my valuation sheet, as it only looks at whole years. Because if we look at Q1 2022 versus Q1 2023, revenue is down 9% overall. AMD makes the majority of their revenue on their gaming products, and that segment has been down too, 6% Q on Q. Maybe that's demand issue? I don't know. In that time, data center revenue was flat, client business was down 65%. This was because AMD had to lower prices to spur on demand, but it really didn't help much. But the good story is, embedded was up 165%. So what is embedded? Embedded is where AMD delivers chips for other companies to embed in their solutions. For instance, AMD delivers CPUs for Starlink, Tesla, other car manufacturers, NASA, etc. But we do see a scary trend. Even if AMD's revenue in total is up 44%, total operating income is down 65%. Yes, I know, again, most of this was because amortization of the Xilinx acquisition and the fact that R&D was up too, but it's still a lot. If we look at Q1 2023, we see a loss of 145 million. Oof, so it seems there's a little trouble here. We're gonna have to keep an eye on the Q2 numbers. My valuation looks at the last 5 years, and here AMD gets saved by the great 2020 and 2021 numbers. That's why the 5-year operating income looks okay. When we look at EBITDA, earnings before interest, taxes, and amortization, here there was a 39% growth from 2021 to 2022, but 2023 doesn't look like it's going to be great. Oh. Again, it's the great 2020 growth that helps the 5-year trend here. So let's see what happens when 2023 is over. Then we'll know what the year looked like and how the trend was. I'm not very optimistic. EPS, earnings per share. AMD went from negative $0.03 per share to $0.34 per share. Again, 2022 was hit by the ceilings buy, but still, I believe 2023 is going to be a bad year for AMD, so let's see. Free cash flow, yeah, 5-year average growth of 156%. That's absolutely amazing. And yes, the enormous jump in 2021 was mostly because of the pandemic, but hey, whatever works. Everything could be sold at any price. Everyone needed computers and chips, fast. Still, amazing growth. But did you notice that even if revenue, income, and EBITDA spiked in 2021, EPS did not? Well, that's because AMD decided to repurchase shares for almost $2 billion. Why would they do that? Well, it was a part of the $4 billion plan they made in 2021 and upped the ante in 2022 when the $8 billion plan was announced. AMD says this is because they have a strong balance sheet and a lot of cash, but I like to differ. With a cyclical business like that and the investments needed, I don't believe $6 billion in cash is that much. Look at Intel, they have over $11 billion in cash. I believe AMD is trying to boost its share price, knowing that the sales are not going to increase that much in 2023 and 2024. But let's see. But still, AMD gets a 100% score in the valuation sheet, only because of the high numbers in 2020 and 2021. Let's look at the financial strength. What does that look like? I'm just going over the individual points fast. If you want to have a deeper explanation of them, please see my video on the metrics where I explain each and every one of them and how I use them. Cash to debt ratio. How long will it take to pay off debt using cash flow? AMD's ratio is 2.09, which is very good. For comparison, Intel has 0.52. If cash to debt ratio is greater than 1, the company can pay off its debt using the cash in hand. If it's smaller than 1, it means the company has more debt than cash. If that's the case, it's important to look at the interest coverage. Ben Graham requires that the company must have an interest coverage of at least 5. I want 3. Equity to asset ratio. How much equity does a company have in relation to its assets? Meaning, how much of a company's assets have been generated by issuing equity rather than taken on debt. AMD's number is 0.81 or 81%, which is quite good. Best of the competitors, Intel is around 0.55. I like to see around 0.70. Debt to equity. Debt to equity measures the financial leverage a company has. A high ratio generally means that the company has been aggressive in financing its growth with debt. AMD has a debt to equity ratio of 0.05 or 5%, which is great. Intel is at 0.51, so again, win for AMD. Current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay the short-term obligations. It's called current because it uses the company's current assets to pay current liabilities. AMD's current ratio for 2022 is 238, which is quite okay. A ratio under 1 indicates that the company's debt due in 1 year or less are greater than its assets, cash, or other short-term assets. This means such a company would not be able to pay off its obligations if it came due at that point. The higher the current ratio, the more capable the company is paying off its obligations. The quick ratio. This measures a company's ability to pay its current liabilities without needing to sell inventory or use financing. The quick ratio is a little bit more conservative than the current ratio. Low or decreasing quick ratios generally suggest that a company is over-leveraged, struggling to maintain or grow sales. AMD's quick ratio is 1.74. Compare that to Intel's 1.16. That's an okay. But it's definitely not among the leaders like Texas Instruments 405 or Nvidia 279. So, good, but not great. Cash ratio. Cash ratio measures a company's ability to meet its short-term obligation with cash and near-cash resources. It's a little bit more conservative than the other liquidity ratios as the quick and the current, because it only considers the company's most liquid resources. AMD is at 0.90, and just for reference, Intel is 101. So they're quite close there, but that's because Intel has a lot of cash on hand. I would like to see at least one or better, like Texas Instruments 329 or Micron 206 or Broadcom with its 169. Debt to EBITDA. This ratio measures the amount of income generated and available to pay down debt before covering interest, taxes, depreciation, and amortization expenses. A ratio of debt to EBITDA exceeding 4 is usually bad, unless you have enough assets to cover that debt. AMD's debt to EBITDA is around 0.58. Again, compared to Intel's scary 5.26, AMD is doing great. Interest coverage. Interest coverage is a ratio that determines how easy a company can pay its interests on outstanding debt. Ben Graham required a minimum coverage of 5 with all the companies he invested in. If the interest coverage is less than 2, the company is very, very debt burdened. AMD is at 1.68, and we can see that the total liabilities rose from 5 billion to over 67 billion in 2022. Yes, ceilings did some of that, but that's how that works. And the long-term debt went from 1 million to almost 2.5 billion with a B in 2022. So we need to keep an eye on debt for 2023. Remember, Intel is around 4.71. The Piotrowski F-score. Wow, if you want the complete explanation of this, see my video on the metrics I'll use. I'll just recap what values are good or bad. A good score is 7 or above. A bad score is 3 and below. AMD is at 4, which is not really very good, and following the rule of Piotrowski, we should not invest in AMD when the score is so low. I especially noticed that AMD's score is bad in the higher ROA year over year, current ratios, gross margin, and asset turnover. The Altman C score. The Altman C score is used to determine if a company is on the way to bankruptcy and can announce that 2 years in advance. A score below 1.8 is bad, from 1.8 to 3 is called the gray zone, and everything over 3 is safe zone. AMD is at 8.41, so kinda safe. The Benich M score. This one is used to identify whether a company has manipulated its earnings or not. Usually used to uncover financial fraud. A score of less than minus 178 suggests that the company is not manipulating. A score greater than minus 1.78 suggests the company is manipulating. AMD's score is minus 2.68, so not likely they're manipulating anything. WACC versus return on invested capital. WACC is the weighted average cost of capital, which tells us how much interest we should expect the company to pay for every dollar it finances. Return on invested capital measures how well a company generates cash flow relative to the capital it has invested in its business. So, comparing WACC versus ROIC shows us if the company is creating value or destroying value. AMD's WACC is weighted average cost of capital is 16.68%. Return on invested capital is 0.70%. So, the returns does not match up with the cost of capital, i.e., AMD is destroying value at the moment. To recap, AMD's financial strength score in my valuation sheet is not good, only 58%. Let's jump to the profitability and growth part before we get into the valuation part. Gross margin and 5-year growth. Well, gross margin is at 44%, which is nice for a large-scale chip maker, and compared to Intel's 38%, that's good. But not that great compared to some of the others like Texas Instruments, 67%, Broadcom, 67%, Qualcomm, 56%. If we look at the 5-year growth, we see a measly 6% average growth, and 2022 was even a 7% decline. Yeesh. Operating margin and 5-year growth. Here I would like to see some nice numbers like with the competition, but AMD is down around 5.36% for 2022, and for Q1 2023, it's minus 2.71. Minus. Yes, some of that was extra research and development and increased headcounts, and still some expenses related to the Ceilings acquisition, but I think that's not the whole story. I'm waiting to see the Q2 and Q3 numbers, and I think we'll see a further decline. The 5-year growth is again helped by the great numbers from before, but they're not going to help forever. Just for comparison, Texas Instruments has an operating margin around 50, Broadcom is 45, and Intel is just as low as AMD. This fight Intel and AMD is having is not helping any of them. Net margin and the 5-year growth. AMD is at 5.59% for 2022. If we look at Q1 2023, it's minus 2.60. Only Intel is in those numbers. All others are at almost 40%. So again, I think both AMD and Intel are hurting bad and will have a bad 2023. ROE, return on equity. ROE tells us how efficiently the company generates profits. The higher the ROE, the better the company is at converting its equity into profits. ROE between 15 and 20%, those are my targets. For 2022, AMD was at 0.72%. Ugh. In Q1 2023, it's minus 1.02. Again, AMD is at the bottom of the barrel. Only Intel is worse with its minus 2.84%. ROA, return on assets. ROA measures how efficiently a company generates profits from shareholder equity plus liability. AMD is 0.59 for 2022. AMD again is at the bottom. Only Intel is also down there with its minus 1.61. Every competitor is doing better than these two. Return on investment. What are we expected to get out of our investment in this company? For instance, the S&P 500 has historically returned around 10% in average. I expect at least 12% on my investment. AMD is around 2.21% and definitely too low for me. ROIC, return on invested capital. This shows us how well a company generates cash flow relative to the capital it has invested. If you remember from the WACC versus ROIC, AMD's return on invested capital is very low, around 0.70% for 2022. Q1 2023 ended with a minus 1.12, so definitely not going the right way. The only competitor in that low range is again, let me hear, did you guess it? Yes, Intel. Did I mention that I'm looking at Texas Instruments instead? Well, that's another video. ROC, return on capital, Joel Greenblatt. From his book, The Little Book That Beat the Market, he made this nice little valuation method. And again, see my video on the metrics for an in-depth explanation. Here I'll just mention that the way Joel Greenblatt defines return on capital is a more accurate measure. A high double-digit figure often means that the company has a defensible edge or a so-called moat, like a strong brand or a unique product or something like that. AMD is at 6.06%, and compared to the competition, only Intel is at minus 3.25%. Micron is at 5.32%. AMD's Q1 2023 ROC is minus 8.28. ROCE, return on capital employed. Unlike return on equity, which indicates the profitability of shareholders' equity, ROCE also considers long-term debt in capital employed. AMD for 2022 was 0.43%, and Q1 2023 is at minus 0.67%. Generally speaking, a higher ROCE indicates stronger profitability. And yes, you have guessed it, AMD is at the bottom of the pile here too. The profitability growth score ends with a measly 33%. Not great. Now to the real interesting part. What is the intrinsic value of AMD and what do I consider being a fair price for a share of AMD? Here I should mention that it's really hard to guess the future growth rate, and especially for a company that is declining, or at least declining profitability. So we need to make a lot of assumptions here, and we have to be careful with the end result. I already know that AMD is not for me to invest in, but I'll try to put a value on it anyway. I look at price to sales ratio. This compares a company's stock price to its revenue. It measures how much investment is needed to deliver $1 of revenue. With a PS ratio of 7.57 for 2022, AMD is higher than almost every competitor. Even Intel looks better here with their price to sales ratio of 2.12. Price to book. Price to book compares the share price to the company's book value per share. For end 2022, price to book was 365, and for Q1 23, 374. EV to EBITDA. Enterprise value to EBITDA tries to value a company and is supposed to be a little better than using PE ratio. For 2022, AMD was at 34.11, and Q1 23 is 41.11. Usually you would like to see EV to EBITDA below 10. To comparison, the industry median is 13.66. The PEG ratio, price to earnings ratio divided with the growth rate. This is considered an easy way to compare companies with different growth rates. AMD was at 6.59 for 2022, and Q1 23 is 7.77. Industry median is around 1.12, and the real good competitors are at 174 or 1.33, so that's a bit high. Earnings per share versus the 5-year average. This is earnings per share divided by the 5-year average. I use that to see where are we going, and I need it for the EPS valuation. AMD is at minus 46, which is horrible. Book value per share. This is a very conservative value of what a share in the company should be worth. It is shareholder equity divided by shares outstanding. Then 2022 was $34.85 per share, and end of Q1 2023 is $33.98 per share. Now we come to the valuation part that's really great, the EPS valuation. Here I use a standard discounted cash flow valuation where I use earnings per share to determine the intrinsic value. As I mentioned, it's extremely hard to predict growth, and especially over a 10-year period with ups and downs. So I'm going to have to take some guesses and assumptions. I use a 20% growth rate for the first 5 years, 15% for the next 5 years. My minimum rate of return is 12%, and then I discount that back, and I expect the price multiple, the PE, to be around 40. Yes, I know it's a little bit higher, but that's what I'm guessing around. This gives us a share price today of around 61. I also make the same valuation using the free cash flow, as this is usually a little bit higher than the EPS valuation, so I have a good high and low to calculate from. I use the same growth rates and I use the same discount and the same multiple. 20% for the first 5 years, 15% for the next 5, 12% as my minimum required return, so this is my discount factor, and 40 as the multiple. This gives us a share price of around $108. And remember, we haven't used any margin of safety yet. One could argue that using these different valuations is our margin of safety, so I'll look at that at the end and see if it's okay. The Graham number. Even though this would give us a very low valuation, I use a slightly modified version, and I know my version will give me a higher price, but I know why it's doing this. And usually the Graham number does not work when companies' PE is higher than 15. That's why I have to modify it. This version gives me a share price of around $27. I know it's not a credible price, but we need to have a low number also. Graham numbers are always low. Peter Lynch fair value. Peter Lynch fair value applies to growing companies. The ideal growth rate is between 10 to 20% a year. For non-bank companies, the growth rate I use is the average growth rate for the EBITDA per share over the last 5 years. For banks, the growth rate I use is the average growth rate for book value per share over the past 5 years. If the 5-year growth rate is greater than 25%, I use 25. If the growth rate is smaller than 5% a year, I do not calculate the Peter Lynch fair value. With my modified Peter Lynch fair value evaluation, we get a price of around $70 per share. So, adding all those valuations up and finding the average, we get an average share price of around $60. As I used both low and high valuation, I don't really need to add margin of safety, but just to be on the safe side, I also add a 10% margin of safety. This gives us a buy price for AMD around $54–55, and looking at the curve, we can see that that price was reached in October 2022, so it is a possible price. If we don't use any extra margin of safety, as it could already be built in, we could argue that the target price around $60 is the correct one. And again, it was there in October and again in January 2023. So even some might say that's a lowball price, it is possible and could very well be the correct value right now, especially seeing the numbers going lower and lower and lower. I didn't go into the last part of my valuation as AMD does not pay dividends, but they have started to do buybacks. Again, why would they do buybacks instead of paying dividends? I think it's because AMD wants to please the investors, but doesn't want to become associated with some old and stuffy dividend payer. I would actually prefer AMD stopped those $8 billion share buybacks and start reinvesting in more production facility and try to lower COGS, cost of goods sold, and I would really like to see more focus on the mobile device market. So, as you probably already guessed, I won't be investing in AMD in 2023. Not even if some people would argue that they are a turnaround play because of the massive focus on AI. But hey, if you really follow the AI market, then you would know that a lot of the latest models have been optimized to be able to run on PCs and even mobile devices. Think about it. Imagine you had Siri on your phone being able to access the total knowledge in the world. Well, kind of. This will be the goal for most AI companies. But that's why I invest in Elon Musk. He thinks a little bit farther than anybody else. Musk is doing Neuralink. This is where they want to drop the slow human interface like fingers and spoken word and tap directly into the brain. Think about that. Instant knowledge all the time. I can't even imagine how that's going to work. Well, I hope you got some value from this video, and if you did, please hit the like button and maybe even subscribe. If you have a company you would like me to look into next, write the ticker in the comments, and if enough people ask for the same, I'll consider looking into it. That's all, folks. I hope to see you in the next video. Remember, the best investment you can make is in you. The more you learn, the more you earn. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the ninth inning. There ain't no point in resisting. Living